Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Fiya, Indriyani from Group of Cash Flow and Analysis and Strategic Tools of Financial Management. Today we are presenting about this topic, and then content of this presentation is first about us, second means of cash flow, third is why cash flow is important, fourth is how to do a cash flow analysis, and 5 is strategic tools management. First, about us, introduction, the group members. Our member consists of Audya, Intan, Mutiarani, Elsy, Dwita, Indah, Fiya, Indriyani, and Regita Salsadila. Second, means of cash flow. Cash flow analysis determines a company's working capital, the amount of money available to run business operation and complete transaction. That is calculate current asset, cash or near cash asset like notes receivable, minus current liabilities due during upcoming accounting period. Example, cash flow statement show liquidity when income statement show profitability. Many income items are also cash inflows. Third, why cash flow important will be presented by Audya, Intan, Mutiarani. Time is yours.
Thank you, Fiya. The third is why cash flow is important. Next. Engaging in ongoing cash flow analysis is important because it helps you to identify any problems with your incoming or outgoing cash. For example, if you have revenue streams that are not producing as much money as they should, cash flow analysis will shine a light on them so you can make change. The fourth is how to do a cash flow analysis. To do a cash flow analysis, you need your cash flow statement, which should include your business income and expenses on a monthly or yearly basis. Step by step to prepare cash flow analysis. The first step to understanding how money flows through your business is to identify the income that regularly comes in. You need to calculate your net income when you create a cash flow statement in step 3. Your net income is the total amount of income earned in a period of time minus expense, taxes, and interest owed. Next. The second is piece of information you need to conduct a cash flow analysis is your total business expenses. This may include inventory purchases, accounts payable, deferred revenue for upcoming project or services, or any other liabilities on your books. Other possible expenses include depreciation on fixed assets, as well as income tax expenses. The third is create your cash flow statement. A cash flow statement typically has 3 sections that reflect operating income and expenses, company, investment, and financing arrangement. Next. Strategic tools of management will be presentation with Elsy.
Thank you, Intan. Strategy tools of management. The first SWOT, strength, weakness, opportunity, threat. The second, Porter's value can. The value can is a simple graphical method for identifying and describing a firm's main function and understanding how they contribute to value creation. The third, the strategy Canvas, the strategy canvas, was popularized in the book Blue Ocean Strategy. You can ask it to understand how a firm differentiates itself from its competitors. Next. The business model. Canvas, Alexander Osterwalder and Yves Pigneur introduced the business model canvas in the book Business Model Generation. It is a very effective way of describing the key component of a business model. You can ask it as the starting point for strategy analysis as well as for exploring alternative business models. The pestle framework is useful for ensuring that you consider a broad range of possible sources of opportunity and threats. The latter represent the political, economic, social, or socio-economic, technological, environmental, and legal opportunity and threat in the frame environment.
Okay. McKinsey 7S. The McKinsey 7S is useful for ensuring that you consider all aspects of the organization when identifying its strengths and weaknesses. The 7 Cs stand for structure, system, style, staff, skills, strategy, and shared values. Porter's 5 forces. Porter's 5 forces model is another framework for identifying threats and opportunities within the firm's environment. It considers the bargaining position of suppliers and customers, including distributors, the threat of new entrants and substitutes, as well as competitive factor within the industry itself. Next, Patero analysis. A Patero analysis is based on the maximum that 27% of the product service customer of or distribution deliver 80% of the profit. Pareto cards is a useful visualization for showing this. However, its accuracy depends on the reliability of your cost allocation system. BCG matrix. You can apply the BCG metric to any business with more than one product on several line on more than one customer segment. Plot the market share against the market growth rate for its product, service, or customer segment. Then consider strategic option based on their relative position on the card. Scenario analysis. The future is inherently uncertain. Fortunately, good business strategy only requires you to be able to anticipate the future. You don't need to be able to predict it. Scenario analysis is a tool to help you to anticipate multi- multiple different features. This allows you to construct your strategy around the premise that you can be sure which, if indeed any of them will come to pass.
And that's all our presentation today. If you have any question, just ask us in WhatsApp group on our WhatsApp message. Thank you for your attention. I'm sorry if any mistakes from us. That's all. Wassalamualaikum warahmatullahi wabarakatuh.
Assalamualaikum warahmatullahi wabarakatuh.